Okay, we've got a bunch of you joining. Good afternoon, everybody. Give us a few minutes to watch everybody joining us, and then we'll get started. We have a lot to go over today. So while we're waiting for us to get a quorum, we do want to express our apologies for the technical difficulties that we experienced last week. And so we appreciate your support and understanding. We are moving the sessions 1 week back, so no major delays. And we have ensured that the technical glitches should never occur again. So we're working on that. Thank you, Joy, the Florida chapter and the Georgia chapter for making sure we got that all taken care of. So thanks, John and Lynn. I do also want to verify again and quantify that you really should be following these modules along as we go through it, either do it prior or after the course. We're going to take about few minutes to see if there are any questions from last week, and then we'll get started on this. But as I prepped this course, I will give you my feedback. I felt the financial accounting concepts and all of the formulas are something that you really do need to ensure that you focus on. So take definitely time on this section to do that. So if there are questions during the session, if you don't mind putting them in the chat. We are recording this. I'm assuming that Diane, you are started the recording button here. And we'll make sure we get these posted for anybody that wants to revisit. But let's open it up for any questions from last week on the modules that you did, and perhaps as you went through your self-learning courses as well. Feel free to take yourself off audio if you want to just ask the question live, please. Okay, I'm going to take that as no, but feel free again to put questions in the chat and we'll monitor that for you as well. So our learning objectives for today, what we want you to come away with is the key concepts of financial accounting. Managing any business requires a basic understanding of financial management. Accounting is a way of keeping track of the resources to get the work done and enables the measurement of financial results of business operations. If you know what resources you are using, you can be more effective in controlling them and make your organization more efficient. So this section is going to provide you a very broad overview of financial accounting. We'll do the overview and the key concepts. There's a significant amount of materials that will continue to reinforce that in the online session as well. So the purpose of our chapter learning program today is really just highlight the key knowledge for strong job performance. We only have time to allow for the overview of the key concepts. So we're going to go through that for you as well. So learning objectives that you should be able to come out of from today's session. Sorry, I went through that pretty quickly. Hit it one more time. How can you do a basic analysis of an organization's financial condition? The basic measures of operational performance to an organization's financial statements, and then know what accounting reports are typically used in the analysis of financial statements within healthcare. So the accounting system used in most healthcare organizations, physician offices, hospitals, dental clinics, or health plans, is based on a double entry system where there are two sides to every transaction and the two sides must always be equal, or as an accountant would say, in balance. As the name implies, double entry bookkeeping means that every financial transaction is recorded in the books of a business twice, and usually at the same time. One entry is made to an asset or a liability account, the other to an owner's equity account, and sometimes both entries are made to asset accounts, liability accounts, or an owner's equity accounts. However, in all double bookkeeping entries, the amounts recorded must equal each other. An example would be recording the purchase price for an item and also the item. So accounting basics, right? Balance sheet accounts are permanent accounts because their balances carry forward to each new and successive accounting period and can be broken down into three categories: assets, liabilities, and net assets. So that net assets would be in a not-for-profit organization, where a equity is in a for-profit organization. So if you think about your own personal finances, and we'll have some examples here, you have things that you have, and you have bills that you owe. Most of us do. Accounting is no different. We break these things into those three categories. What you have or are owed. It's known as an asset. It is an economic resource available for use. Think a home. What you owe, known as a liability, an economic obligation, or a debt owed to another person or land. Think a mortgage. And what you get to keep or retain, known as net assets, or equity. It is the difference between assets and liabilities, and is considered the owner's financial interest in the organization or the net worth. Think your home equity. So we're going to have a concept side here, and I think, Diane, do we have this as a polling question? Cool. Okay. So you bought a house for $2,500, that'd be nice, $250,000. The terms of the purchases were 20% down, and then you took out a mortgage for the balance. How would this transaction be recorded? And if you, again, if you don't get it right, we get it. Take what I want to make sure we're leaving with you, and you will get copies of all of these available as you do it, is just understanding how to calculate the information. It looks like we've got pretty much most of you have answered it. So let's, Diane, end polling, and we'll move on. Okay, awesome. All right, and the answer is, I'm going to stop that thing here, is 3. A cash amount of $50,000 is used along with the $20,000 debit. And I don't know why there it goes. Is used along with the $200,000 debt to purchase an asset worth $250,000. So the decrease of cash is offset against the additional asset of $250,000. Thus, the transaction results in a net increase in assets and liabilities of $200,000. Good job. It sounds like most of us have had mortgages at some point in time. Sorry. So another basic element of accounting is the matching principle, which says that when recording transactions, we should match the revenues earned in a given time period, a month, a quarter, or a year, with the expenses incurred to earn that revenue. So if a clinic provided 200 patient exams during the month of January 2021, and those exams resulted in $10,000 in revenue, then the expenses generating during that time frame, such as salaries, office rent, supplies, should be recorded in the same month. In some cases, we may not know the exact amount of revenue to be collected or salaries to be paid at the end of that time frame, so we are using. In that case, it is allowable to use a reasonable estimate until the true amount is known. In accounting, that estimate is called an accrual. The matching principle is the basis for what is known as the accrual basis of accounting. So most corporations are required to use the accrual basis of accounting, and it is specifically required by CMS for financial reporting purposes, for such as a hospital FQHC or a health plan annual cost report. So generally accepted accounting principles, right? The accrual basis of accounting is a part of generally accepted accounting principles, or GAAP, defined by the American Institute of Certified Public Accountants. The accrual basis of accounting is also requirements of the Financial Accounting Standard Boards, the Government Accounting Standard Boards, and are all sets of rules and guidelines similar to those set up by the Joint Commission and CMS. So accounting basics. The other common basis of accounting is the cash basis of accounting. Cash basis accounting is similar to how people normally keep their personal checkbook, recording revenue when received and deposited to the bank, and recording expenses when a payment is made. Some physician offices use this method because of its simplicity. The cash basis of accounting would be accepted in a small organization like a physician or dental office. Larger organizations like hospitals, multi-specialty facilities, or health plans would be required to use the accrual basis of accounting. So here we have another concept slide. Let me get the answers up here. And I think Diane has that polling question ready to go. All right, so a practice had the following transactions: provided and billed for $800,000 worth of services, collected $750,000, incurred $750,000 in operating expenses, and paid $725,000 in expenses. Using the prior formula, calculate the profit for the practice. Okay. Let's move along. We have a lot of material. It looks like most of you have answered. The correct answer is number 2. Since the clinic uses the cash basis of accounting, it calculates the profit using the actual cash collected. Okay, moving on to the next slide. Okay, so which 3 categories are required for the accounting equation? So I'm throwing in another one out here. So which 3 categories are required for the accounting equation? Assets, liabilities, net assets, accrual assets or liabilities, accrual assets, net assets. Okay, we've got a good portion that have voted through it. So the correct answer is number 1. These categories express the financial reality of a transaction, what I have assets, what I owe liabilities, and what I get to keep net assets. Good job. All right, moving on. Go through that slide. Okay, so key financial statements. The basic principles of accounting described here are used to prepare the 3 financial statements used in managing a business, including a healthcare organization. These statements are the income statement, or the statement of operations, the balance sheet, or the statement of financial position, and the statement of cash flows. I'm sure they call it something else. I just don't have that here. So let's focus on the income statement. All right. Income statement is a statement of activities that summarizes the revenue, expenses, and income for an organization over a specified period of time, whether it's a month, a quarter, or a year. The income statement is generally organized the same way, regardless of the type of entity it relates to. The basic format of this statement is revenue minus expenses is equal to income. Pretty simple there, right? These similarities, however, end with those high-level classifications. Income statements for physicians, clinics, hospitals, and health plans will appear different from each other. So important income statement concerns that we want to make sure that we focus on. Hospitals and physicians may serve patients who are unwilling to pay whatever is due, and these amounts are referred to as bad debt. Some healthcare providers, primarily hospitals, will provide care to persons without health insurance or the means to pay for care, and this is known as charity care. In financial statements for external use, charity care is reduced from gross revenue and not separately identified on the statement of operations. It is reported in a note to the financial statements. Many will consider bad debt and charity care as the same thing, a foregone payment to someone who cannot pay, although this view is not correct. The difference between bad debt and charity care is the question that you're asking, right? With bad debt, the patient has the ability to pay, but does not. While with charity care, the patient does not have the ability to pay. Accounting standards recently narrowed the definition of bad debt expense effective for most hospitals after December 15th, 2018. You should review the online course for more details on the correct calculation of this moving forward, as we really don't have time to review that in detail today. So let's talk about the balance sheet, right? The balance sheet, which is also known as the statement of financial position, describes the organization's assets, liabilities, and net assets at a specified point in time, usually the end of an accounting period, month, quarter, or year. This definition applies to a physician clinic, hospital, health plan, or other healthcare organizations. This financial statement is based on the accounting identity described earlier. Again, assets equal liabilities plus net assets, right? Neither revenue nor expenses are shown on the balance sheet, only assets, liabilities, and net assets accounts. Here are key points to remember regarding the balance sheet. It reports an entity's financial position at a point in time, what is owned and what is owed. It must be in balance. Debits equal credits, so it's called a balance sheet, right? It is based on the accounting identity. And as I said, it includes your assets, your liabilities, and your net assets, which I think most of you got that concept pretty clear already. So key concept side. Let me get all the questions out there. Statement of accounts, activities income statement includes the characteristics checked below. Choose more than, it may not do that, right, Diane? I think we can only choose one. So choose one and we'll go through all the correct answers. My apologies on that. Live and learn as we create these polling questions. So. And I will have to double check my answers and get back to you. The correct answers that I have listed is actually 1, 3, and 4. So I'll go back and look at what HFMA had. I pulled this directly from an HFMA poll. So if there's any corrections there, I'll make sure we get that out to the group. Let's go on to the next slide. unless I maybe changed my order. So, okay, statement of cash flows is a financial statement used to determine the source and use of cash for a healthcare entity using the accrual basis of accounting. This statement literally breaks down the change in the cash balance for an entity from the beginning of an accounting period to the end of that period. It generally looks the same for a physician clinic, a hospital, or a health plan, and it breaks the sources and uses of cash into three broad categories: cash flow from operating activities, cash flows from investing activities, and cash flows from financing activities. Okay. Important to note that the income statement and balance sheets have very close interrelationships. Most significant is the relationship between receivables on the balance sheet and revenues on the income statement. For the most part, a healthcare provider, physician or hospital, provides services on a given day, but then waits for payments for an average of 40 to 60 days. The generation of revenue does not result in a significant amount of cash at the time of service. Instead, the revenue is recorded on the income statement when it is earned, and a receivable is recorded on the balance sheet at the same time. However, it is important to note that just because a service has been provided and revenue earned, there may be a lag in time before the cash will be collected for that service. That's what we know here in revenue cycle. And that lag is reflected in the amount of receivables on the balance sheet, hopefully not as high as some people have it. Managers and healthcare entities of any type should recognize that transactions are shown on the income statement might also have an impact on the balance sheet. Essentially, any timing difference between the recording of an income statement item and it's finally being paid or collected in some future time period is captured on that balance sheet. Okay, another concept slide. Get these out there for you. Okay. So ABC Clinic provided $250,000 in services last month. How would this be recorded in the financial statement for the clinic? They increased the revenue by 250, increased payables by 250, increased revenue by 250, decreased payables by 250, increased revenue by 250, increased receivables by 250, increased revenue by 250, decreased payables by 250. Okay. Another minute or two, or seconds, sorry, not minutes. Okay, the correct answer is number 3. The clinic providing services generates revenue. So 250 would be recorded as an increase in revenue and an increase in receivables. So, good job. So, probably have a lot of financial people on this call, don't we? Okay. All right. Payables and receivables. So 2 very important sources, uses of cash for a healthcare business come from the management of payables and receivables. When the entity has an increase in receivables from one period to the next, this change represents a use of cash. This is because the amount owed for services but not yet collected has increased, and the entity does not have the cash available to spend. Because the organization has not collected what is owed, it has foregone the use of cash in the current accounting period. Thus, the cash that could have been collected and used to increase the entity's cash balance remained in the receivables. So increases in receivables, therefore, represent a use of cash, and so would be shown as a negative number or a value in parentheses on the statement of cash flows. So we do have one more concept slide here. Which of the formulas listed below results in net income on a statement of activities? Revenues minus expenses is equal to operating income plus non-operating losses net income. Revenues plus expenses equals operating income plus non-operating income minus non-operating losses equal to net income. So operating income minus non-operating income plus non-operating losses net income. And then expenses minus revenue equals operating income plus non-operating income minus non-operating losses equal to net income. So I'm not going to be surprised if, either when you don't decide to answer it, or you really, again, unless you're doing this, you may not live on this on a day-to-day basis. The intent of the polling or the key concept slides for me was to give you ideas as to what I don't know what's on the exam. Even if I did, I couldn't tell you. I took it a long, long time ago. But I do remember that understanding financial concepts and how to calculate this is something that I felt was very important when I did my studying. And I think it definitely results that. So cool. Okay. Diane, I can't seem to get rid of the polling question on my computer. Sorry. Okay, there it goes. Sorry. It's not the end of our, there we go. Okay. Gaining a good understanding of the results described in financial statements also requires an understanding of what happened during the time period covered by a financial statement. Sorry, went too far. Usually the what happened is described using an operational metrics. Operational metrics are simple ratios that describe the volume of services provided to patients or members or the resource used to provide services. Common operational metrics vary by the type of the healthcare entity and typically relates to the volume of services used or the volume of resources used to provide services. Hospitals use two common metrics based on the utilization of inpatient capacity: average length of stay and occupancy percentage. Ratio analysis is used in businesses to assist managers in understanding the relationships between elements in the financial statements. They are also useful in comparing an organization's performance with others. Ratios are also commonly used by lenders to assess the creditworthiness of a business or even an individual when they go for a mortgage. So types of ratios that we want to focus on today: liquidity. It measures the ability of an entity to pay its current obligations as they come due. Most are common are the current ratio, days cash on hand, days in receivables, and days in payable. Capital structure, which is also known as solvency, measures how the assets for an entity are financed, as well as the ability to pay its long-term debts. Two common ratios are debt to equity ratio and debt service coverage ratio. And then profitability measures the extent to which the entity is generating a surplus and they have sufficient funding to pay operating expenses and fund future growth. Three examples of profitability ratios are operating margin, medical loss and administrative load, and then the operating margin is the single most important indicator of a healthcare entity's financial performance. So we got another key concept slide here that we want to throw out for you. Which of the types of ratios listed is part of a ratio analysis? Liquidity, capital structure, and profitability. Operational metrics, capital structure, profitability. Liquidity, operational metrics, and profitability, or liquidity, capital structure, and operational metrics. Okay, we've got most people have answered. The correct answer is actually number one. These ratios are among the set of ratios used for financial analysis. Cool. All right, moving on. All right. So we want to do a little bit of different management reporting. So let's focus on, so management reporting assists managers in getting information to understand the financial position, financial condition, and the operating results of an entity. There are many tools available, including interim financial statements. These are for internal users and also for some external users, such as banks and bondholders. Annual financial statements may not be frequent enough for managing the business or assessing performance. Most entities, therefore, also prepare unaudited interim financial statements on a monthly or quarterly basis. Departmental operating statements allows the managers of a portion of an entity to manage their resources better. Dashboards provides a summary of key performance indicators, and they usually select KPIs that influence the entity's financial results and are usually such items such as visit or utilization statistics, important financial ratios, or patient satisfaction results. And of course, you always need ad hoc reporting. Each of these tools can be available and used in any healthcare setting, physician, hospital, or health plans. Okay, one more key concept slide. Trying to keep you guys busy here. It is important for healthcare organizations to generate a profit. Just choose the statement below, which is true for healthcare organizations. It is important for healthcare organizations to generate a profit, even if they are a not-for-profit entity. Profits are important only for profit entities, and no entities need to generate a profit. Okay. Number one, all healthcare entities need to generate a profit in order to sustain their operations, just like any business model needs to. As we indicate, no margin, no mission, as we have heard in the industry for quite some time. Okay. So I know we went through that a lot, but there is a lot of material that is available in the section. You don't need to be a finance expert, obviously, studying, etc. After completing the online course in more detail, you should be able to identify the basic elements of the accounting function. You should be able to differentiate between key financial statements and be familiar with the information they provide. And you should be able to determine an organization's financial condition with the use of financial statements and tools. So I'm going to see, are there any questions in the chat? So there was, what was the answer to the last question? I believe I gave the answers to everyone. Was it specific? I apologize, Shelley, I didn't see it before. Which slide, or do you remember the question? Okay. We'll make sure the answers are already available when we publish this, and hopefully if you read through and want to listen again to this when we record it, that it's there. Most of the questions, sorry, Shelley, happy to go running through all them and get all the answers. We'll make sure they're all published to you. So, and that those are available. Most of these questions did come from the HFMA online course. I did make up a few here and there, but I think that probably the one. Okay. Question, was the meeting from last week rescheduled? It has been. We've extended the sessions 1 week past. So we're just going to continue the series on. one more week versus, I think, John, we're at 7 weeks, right, total. So we're pushing it back with the last session being an overview and a recap of all of the 6 sessions we went through prior. So we just moved it to the following Wednesday. So it has been rescheduled. So John, do you want to come in? There is a couple questions here.
Sure.
Yeah, so one of the questions, and I'll try to go back to the slide, maybe you and I can talk about this. Somebody is questioning that the first slide on double entry accounting is not correct, that the double entry would never be for both revenue and expense, revenue and AR, or revenue and cash perhaps. And I'll go back to that slide real quick.
Okay.
But all right, I got to get the chat closed.
So while Christine's getting back to that slide, just so you guys know, HFMA National, or the association, is actually updating a lot of this material pretty much as we speak. So some of the material may come out and have a little bit of typos and everything in it. So again, it's a whole new process, a whole new revamp of the CHFP. But one thing to remember, the material that Christine and I are going over is basically the test is going to be the same. The material is going to be the same. It's just going to be presented in a similar format, but updated slide decks, if that makes any sense.
Let's see if I can go back. And I mean, happy to get everybody on the call and talk about this, right? Open for conversation. I think we're talking about this one. Feel free to come off mute, please. And I'll go through the rest of this. Oops, hold on a minute. I think you're probably seeing the wrong slide. All right, there you go.
Hold on one second.
Yeah. Yeah, double entry bookkeeping means that every financial transaction is recorded in the books of a business twice, and usually at the same time. One entry is made to an asset or a liability account, the other to an owner's equity account. And in some cases, both entries are made to assets accounts, liability accounts, or an owner's equity accounts. So, and I think then as we look at the next slide, that's kind of where we talked about there being, you have an asset like a home, right? You have a liability such as a mortgage, and then you have what you get to keep or retain, known as a net assets or an equity.
Right. And I'm not, and I apologize, I don't think I'm understanding the question.
Let's see if I can get that chat back up again. Again, everybody should feel free to come off mute if you want to have some dialogue.
Yeah, absolutely. This is interactive. You know, this is what we're here for. So any questions, comments, please.
Yeah. Question was just thinking that the first slide on double entry accounting is not correct, and that double entry would never be for both revenue and expense, revenue and AR, or revenue and cash perhaps.
Let's get that clarified from the association.
Okay.
Again, these are slides that we actually get from HFMA. So we'll just get that clarified and can have an answer back to the group before next week.
Yeah, because we're not using the word expense in here, guys. We're using assets, liability, and net assets, right? So it is, you do have to account for both, right? You buy a $250,000 house and you put down $50,000 for your mortgage, right? Then, and I think that's the example we kind of used on the next slide. You're going to have 250, right, on one side, right? So your 250 is, you know, you're decreasing your cash by 50,000. You're increasing your assets by 250,000, and you're increasing your liabilities by 200,000. That's the double concept of accounting. right? I think expenses were introduced in other slides. So, but we'll take that away and make sure that, along with making sure everybody has the answers to each question. I have one takeaway to validate. Go back and see that. I might have just built the song wrong, but we'll make sure you have those. Again, most of these are going to be on the online course. And the concepts are actually, they do a lot of, they spend a lot of time to make sure that we did that high level. There are quite a lot of material examples where you're going to calculate things. And so, take this course and then go and make sure you take that. All right. And we'll try to get answers to everything by next week's session. Okay. Probably been about 15 years since I particularly looked at these when I took mine that long ago. So.
Hey, Christine and John, I don't know if you can hear me. This is Cliff Whitmore.
We can hear you. Yeah.
Okay, great. I feel a little intimidated asking my question and then just pulling this up, but if you could go to a slide earlier that had the table, maybe it's a couple. We'll walk through what I was thinking. There we go.
Yeah.
So this is the one that introduced the idea of double entry. And so I saw revenue is 5,000, expense 5,000.
Yeah.
I think the idea was that balance. So I would think that revenue would be one entry. If you provided service, you got revenue.
Yeah.
If they paid for it, it would be balanced by cash. If they didn't pay for it, it would go into an accounts receivable pool, and that would be one entry.
Yeah.
Now, it takes labor, people, product to deliver that service. So there's a separate entry. Let's think about the labor side. So labor would be the expense side of it. And if that's labor you paid for in cash, it would reduce cash, and that would be the balance. So I think that, and then of course, whatever revenue ends up being at the end of a period or expenses at the end of a period, hopefully that's not zero and it's some balance that, will be income.
Yeah. Yeah. And you're absolutely right. First, Clint, the first thing I want to say, and to everybody on here, right? Please don't be intimidated by asking questions. It's important for us to have dialogue and call us out if for some reason we didn't do a good enough job of explaining it.
Mm-hmm.
We are trying to do this during our day jobs as well. And I have not looked at this material in a while. Finance is not my strong point. When John assigned this one to me, I went, oh, geez. But I'm good. I need to know it.
Sure. And I want to say thank you.
Right. Refresh my brain. I think that oh, you're welcome. No, we want everybody to be certified. We know how important it is. So we're excited to be here. I think you're correct. I think us introducing that expenses on that side does make it confusing. When what we were really, like you said, focusing on is here in that double entry method is talking more about asset liability and net assets, right? I don't think expenses really, and John, let's dialogue here and talk about it, is I don't know if expenses necessarily is the right verbiage to use when we're talking about double entry of accounting.
Agreed. And again, we can just get some more information
Yeah.
from the association and back that up. But back to intimidation, you guys, I failed this exam 3 times before I passed it. So don't be afraid to ask questions. It's all good. I know for me, I kept thinking I knew revenue cycle. My weakness was accounting. But since I knew revenue cycle all these years, I'd go in and take it and say, no problem. I literally finally had to sit down, and I may have shared this with you guys before, 1 hour a week and study for about a month, probably 5 weeks, and study the material as it's presented. And that's key because, over the years, some of this has changed. So the more you know the material as it's presented, know it is, from the study guides online, when you go on to HFMA, when you start learning all that, it's going to be a lot easier. And, get down the key words, like what's owns an asset, what you owe as a liability, start knowing those keywords. And then when you get through module 1 and you get ready to go module 2, if you know module 1 well, module 2, you'll zip right through it.
Yeah, and when I took it, we didn't have the online study sessions at all. I had a book, and I was kind of like John. I was dedicated to I was going to pass that test, and I took back what I did in college, and those extensive study sessions in the library where you go hide yourself somewhere, and that's exactly what I did. I would take my book and I have my way of learning. Other people have their way of learning, but I
Mhm.
focused. I think John's concept of taking the exam now to understand what you know versus what you don't know, so that you can focus on those concepts that you will get wrong, and then study that way. But you have got to study for these exams, which is exactly
You
what
do.
we did. And I don't use these formulas often. So, refresh my memory on this. It's not in my current day-to-day world. So please, yeah, guys, let's make this meaningful for you guys. So we appreciate the input and the working together to get everybody certified. So,
And just so you know, if you go out and you don't pass, 30 days, you can take it again.
yep,
So, for me, I would go out and take it, see what I'm strong in, what I'm weak in, and
great.
then basically start applying it to these sessions that Christina and I are doing.
Yeah, I'm afraid to take the exam again because I want to know if HFMA will take my CHFP certification away if I fail. So I have to have a conversation with Shirley about that. So, all right, open up for questions, guys. Any additional questions in the chat? Not seeing any. Or again, open dialogue here as well. Is there a group communication going out as I am not receiving recordings or materials from prior sessions? I thought, John, all the materials were sent to the attendees. Um,
Yes, they were,
yeah,
because we had some technical difficulties.
yeah,
So if you're not getting anything, just shoot an email to Christine or myself, and we'll get you the material from course one.
yeah. And we are, I believe that Florida has, I can only speak to Florida, that Diane is loading up our materials on the Florida website. So you should be able to find the materials there as well. I believe we are recording this session today. John, I do know that there was an issue with the recording from 2 weeks ago. Have we resolved that and gotten that so we can share that and distribute that? I believe we're putting the recordings on, I know the Florida YouTube channel, but
And we're also doing similar in Georgia. I think they're a little behind in getting
okay,
those out there, but they'll definitely be on the Georgia HFMA website also.
okay. Yeah, and you don't need to log in or sign on for any of that. Again,
No,
it's the Georgia, both the YouTube channels and stuff that you should be able to easily access those as well. But as John said, send us an email if you need anything. We'll jump on it as quickly as we can. All right. Let me see. We got some other chats. Here. Right. Has the operational excellence part 2 been reopened? It looks like the site is still having trouble.
great question. I know I talked to Shirley about this. Shirley at the association or national. She sent me an email. If you guys have passed module 1 and having trouble getting into module 2, send us your names. We'll send it to Shirley and she'll check that out for you. But I've had this come up several times.
Yeah. So, John, what is your email again?
Sure. It's John, JOHN .Lloyd, LLOYD
Yep.
at Wakeasoc, WAKEASSOC.com.
I think we got that right?
Is there any way you can send that in the chat?
I did just put it in the chat,
Oh, you
guys.
did? Okay, great.
Yep. So I think our emails are on the front page of the decks as well. I think we put them there, John, right?
Yes.
Yeah, I'm the one that's not getting the deck, so.
Okay. Okay. We'll get it out to you. Yeah.
All right. Yeah, let me go see if I can go back to that. Any other questions? Oh. Okay. that first page. There we go. Oh, maybe we did not. You're right, John. We'll have to make sure we do that in the future. So the deck wouldn't
Absolutely.
help even if you didn't get it. So, all right. All right. So open up for other questions. See if there's anything else additional in the chat. Okay. Okay. Well, and if not, we give you a little bit of time to probably, hopefully, maybe you were lunching and learning while you joined us today. If not, grabbing a quick lunch before you go back to your normal work day. So we appreciate you guys joining us today. It really is our pleasure to spend this time with you all. And are going to be so exciting to see all of you earning your CHFP designation, hopefully in the next couple of weeks. So reach out to us, let us know what we can do for you, and enjoy the rest of your day. We'll talk to you next week.
Thanks, everyone.
Thank y'all. Take care.